Welcome back to the video on branch accounting, and today's topic is how to account for dependent branches. So as we discussed in the previous video, dependent branch, all the books are maintained at HO level. So here, but what exactly it happens here? There are so many methods. The first method here is branch account method, where HO prepares separate account for each branch, and in this all transactions with the branch between branch and HO are routed through this account only. Only one account. There will be mostly two accounts here in this method. One is branch account will open, and the other account is goods sent to branch account. Under this method, we'll open branch account and goods sent to branch account. And branch account method is generally prepared where the transactions at the branch are comparatively not huge, like no significant transactions. A very small branches, then HO follows branch account method, not the other method. So it is also a simple method. We can call it as branch account method, branch debtors method. So many names it is, this particular account method is having. Now here also there are two types: cost price method and invoice price method. HO will maintain the branch books at cost price method, or HO will maintain the branch books at invoice price method. We learn both separately, but before that we should learn what is this method. This method actually record here HO maintains all transactions with the branch in an account called branch account for each branch separately. Now, and what are the transactions recorded by HO? Only the transactions between HO and branch. So the internal transactions within the branch will not come through this account. That should be separately prepared using memorandum accounts. What is that? We learn separately while doing the sums on this particular method. Now, what exactly are the transactions which are internal, which can be ignored? Say sales by branch. There is no transaction here directly linked with HO. Similarly, collections at branch. Expenditure paid by branch. So all these transactions are actually internal, like bad debts at branch, discount given by branch to customers. So these are all the internal transactions of the branch which will not be recorded in branch account. Then we should ask me, sir, then how this will be recorded? That will learn slowly how the impact will come. In this, first of all, we should learn what is the accounting entries for branch account or branch debtors method under cost price. We should know what is cost price. Listen, Suppose a good costing 10,000 purchased by head office and sent to branch at 10,000 only, and asked the branch to sell at 12,000. So here head office is sending the goods to branch at its cost only and ask the branch to sell the goods at a selling price. Here head office is invoicing the branch at cost price only. So there is no profit that head office added to the goods while sending to the branch. The only profit is the sale price minus cost price. So this is called cost price method. How do we account in this method? We should learn. And the second one, if the head office goods sent by HO by adding 10% profit on cost, that is called invoice price. It means HO purchased at 100 rupees but sent to branch at 120 rupees. So here head office added 20 rupees internal margin while sending it to branch, but this profit will be realized only if branch sells the good to outsiders. Until that time this is actually a margin, it's a reserve. So how do we account when the goods are sent at cost price only, and how do we account when the goods are sent at invoice price? Is the challenge in the first method, which is called branch account method, or we can say branch debtors method. Both are same. So under this method, what I told you, branch accounts are maintained at head office level. Only one account, major account called branch account, and one more account called goods sent to branch account. Only two accounts shall be maintained at head office for each and every branch. Now see how it happens. First, assuming it's a new branch or a branch already existing. If it is an existing branch, there will be branch assets. I mean, assets means not fixed assets here. Assets like stock, debtors and cash. There will be assets with opening balances. Opening balances of existing branch or nothing. New branch, there is no opening assets. Now, if there are opening assets, these opening assets shall be debited to the branch account. If it is a new branch, no opening assets. But if it is an existing branch, we should write branch assets which are opening balances by passing one entry, that is branch account debit to branch stock to branch debtor to branch cash. So we should record the opening balances in the branch account on the debit side, being all your assets. So first entry for a dependent branch, which is existing branch, where there is past record, we need to first enter the opening assets, stock, debtors, cash, all are at cost price. Debtors are always at selling price, but stock is always at cost price. Debtors because you already sold, right? when you sell, the receivables is always at selling price, but stock should be at cost price. This should be the first entry recording the branch assets. Similarly, if there is any branch liabilities, generally dependent branches no liabilities, as all the liabilities are met by HO only. But if there is any branch liability, suppose branch creditors and branch outstanding expenses shall be recorded in branch account. This is also at the prices which are there as opening balances. So we recorded opening assets, we recorded opening liabilities to the branch account. Every branch you should keep the name of the branch. Assume it is Visakhapatnam branch, we should write Visakhapatnam branch account. Very, very important, because each branch should be named with that particular city, right? So I recorded branch assets, I recorded branch liabilities. Now comes the transactions during the year. The first transaction, generally what happens? Since it is a dependent branch, the branch owned by any assets on its own, branch even owned by inventory on its own. That's why I said this is very rare in dependent branch. No creditors, only outstanding expenses might be there. Now, the first transaction is goods sent to branch by HO. Head office purchases goods and sends to branch. Now, while sending to branch, the entry is now the branch becomes your receiver. Branch account debit to goods sent to branch. Branch becomes your receiver. So debit the receiver and credit what goes out. Debit the receiver is branch. What is going out? Goods. So credit the goods. The first entry is after assets and liabilities. The very first entry. These are the transactions. Goods sent to branch account debit to, branch account debit to goods sent to branch account. The first entry. Here we should write debit receiver and credit what goes out. Basic principles, your real account, personal account and nominal account principles. You debit the receiver. In this case, who is recording the entries? HO and its books for every branch. This is Visakhapatnam branch. So always name the branch. Done. When you send the goods, you recorded this is at cost price only. Only cost price we are learning today. The next entry, suppose if the branch returns the goods. Goods returned by branch to head office. It is also a transaction between HO and branch. Simply reverse the entry, which is goods sent to branch account debit to branch account. Right. Again at cost price. So what we did first step, we recorded all the assets at the branch, opening balances, stock at cost price, and then receivables at selling price. And we also recorded the liabilities. Generally no liabilities in case of dependent branches, because all expenses were met by the head office only. Then goods sent to branch by HO, branch account debit to goods sent to branch account, and goods returned by branch to head office. Reverse the entry, goods sent to branch account debit to branch account. The very next transaction here is branch expense. Generally branch expenses, HO only sends the cash. So cash sent to branch for expenses. Cash sent to branch for expenses. This Who will send the cash? HO. Branch again receiver. The entry will be branch account. Here I am naming the Visakhapatnam branch account. Debit to cash or bank. Again the rule is debit receiver, credit what goes out. Right? So when you send the cash to branch for expenses, it is branch to cash. Right? Whatever you send to the branch, debit the branch. Credit the respective amount. In this case it is goods because goods left. This case it is cash because you paid the cash. Clear? So first transaction record the assets, branch to branch assets. Record the liabilities, branch liabilities to branch. Then goods sent to branch to goods sent to branch. Returns, goods sent to branch, all are at cost price. And cash sent to branch to cash. Now the sixth one, we should now understand what happens. Branch can make sales at branch. We should not pass any entry, no entry. Why? Because branch is selling, nowhere head office is included. Nowhere. So head office is not getting anything. It's an internal transaction. Sales at branch is internal transaction. We don't record here. Similarly, expenses paid by branch, no entry in HO books. Internal transactions. Right. Also, cash collected by branch from its customers, no entry. Why? Because this is also internal transaction within the branch. Then sales returns by branch customer to branch, no entry. Why? Because it is internal, right? And bad debts, commission, discount, bad debt discount, no entry. Why? Because these are all internal within the branch. So no entry in HO books. We don't pass any entry for all the internal transactions happened at the branch. Why? Because these will be accounted in a different format. What is that? 7. Branch made sales. Right. Now, branch customer return the goods to head office directly. See, customer giving to branch, we ignore. But customer given back to the head office. Now HO received the goods back as if it is received from the branch. We should write goods sent to branch, debit to branch account. As if branch is given you back. Though the branch customer is given, but you should record as if branch given you back. Similarly, branch customer paid cash directly to head office. If customer pays to branch, no entry in the books of head office because it is between the customer and the branch. So head office has no business in it. But now customer paid to head office directly. So as if you received cashier bank debit to branch. Which branch? Visakhapatnam branch. So anything where HO is involved, you should see whether as if it is received from the head office only, branch only, not from the customer. Right? Customer pays you back or branch pays you back. Entry is goods to branch, cash to branch. Clear? Now the one comes is next entry. Branch made the sales, branch collected the money, but ultimately it should be sent back to head office because it's a dependent branch. Entire money which the branch collected should be sent back to head office. So cash sent by branch to head office. So the entry will be cash or bank debit to branch account. Again Visakhapatnam branch. So cash sent to branch by head office. So what we did here quickly, recorded the assets, recorded the assets, recorded the assets, recorded the opening liabilities, goods sent to branch, branch to goods sent to branch, returns, goods sent to branch, then cash sent to branch for expense, branch account to cash, and ignored all the internal transactions because there is no involvement of head office. There is no zero involvement of head office in sales, whether it is cash sales or credit sales, expenses paid by branch, cash collected by branch, sales returns by branch, customers to branch, bad debts and discounts. These are all internal transactions. Nothing is to be recorded in the books of HO in branch account. Now, but the customer of the branch sent goods back to HO. Then you should record as if you received from the branch. So it is goods sent to branch. Similarly, the customer of the branch paid cash to HO, then cash at bank to branch, and finally the branch sends you goods, branch sends you cash back, it is cash to branch. So now all transactions are over. Opening assets, goods received, goods sent back, goods sold, cash paid. Now you need to record closing balances of assets. Assets means stock, debtors and cash. Any petty cash. Normally entire cash must be sent back to HO, but some petty cash can be kept at the branch. When we recorded the opening assets on the debit side, closing should be on the credit side. So we should write Visakhapatnam branch account debit to branch stock. If at all there is closing stock, cost price, to branch debtors, selling price, to branch petty cash, cash balance. In the opening also better to mention petty cash because you need to send regular cash to the head office. You can't keep being a dependent branch. Petty cash. Closing also done. So we passed all the entries. Right? Opening assets, opening liabilities, goods sent to branch, returns, ignore the internal transactions, cash sent for expenses, we recorded, cash sent back to HO, we recorded, and we recorded the closing assets as well. Similarly, closing liabilities, which is branch liabilities, debit to Visakhapatnam branch account, closing. We recorded all the entries. Now, what we should do is prepare branch account. Right. All the entries you prepared, right? Prepare the branch account. Once you prepare the branch account, what will happen? The branch account looks like this. To balance brought down, stock, debtor, petty cash. By balance brought down, creditors and outstanding expense. Generally, it should not be there because it is a dependent branch. All liabilities will be taken over by head office. Then it will be like to goods sent to branch and buy goods sent to branch for returns. This is returns. Then to bank, cash or bank. This is for expenses. And buy cash or bank. This is for sale proceeds sent back. And you have buy balance carried down. It is stock, debtors and petty cash. So you pass all these entries. Then you can either be to profit if credits more than debits, or it is by loss if debits more than credits. This profit or loss must be sent to general P&L account of HO. Profit or loss must be sent to general P&L account of HO. Now, so all the entries we passed and we did the solution. Now let us understand with a small example. I'll give it here with the transactions. Assume it's a new branch. So there is no opening balances. There may be closing balance. Simple example. Take an example number 1. Goods sent to branch. Say 1 lakh. Number 2. Cash sent for expenses. Say 30,000, which is rent 10k, salaries 20k. And then number 3, returns, goods returned by branch. Assume say 15,000. I'm giving you tentative figures to see how it works. And then 4, cash sales 50,000 at branch, made at 20% profit on cost. Credit sales 60,000, made at 25% profit on cost. So 2 types of sales made by the branch, right? And 5, expenses paid by branch. Same, rent, branch paid 10,000, and salaries, branch paid 20,000. So everything is given, and next it says cash remitted by branch to HO. This is question mark. We need to identify. And 7, cash collected from customers by branch. Say assume collected from customers in the sense credit customers, say 50,000, and bad debts 3,000, discount allowed 2,000. This is the question given by me. Assume. What is this? Goods sent to branch 1 lakh, cash sent for expenses 30,000, goods returned by branch 15,000, cash sales 50,000, credit sales 60. These two are made at different profits, right? Expenses paid by branch 10,000, 20,000. Same, you received and paid, so no cash balance. Cash remitted by branch to HO we should compute, question mark. Cash collected from customers is given 50,000. Customers means credit customers, because cash sales anyway you collect. Bad debts 3,000, discount allowed 2,000. With this information we need to prepare a solution. How do we prepare the solution? I am doing it here because the question I want to keep it exactly opposite, so I am doing it here. Solution. First, number one, we should see what is the total sales. Cash sales. How much is cash sales? 50,000 cash sales, credit sales 60,000, right? Cash sales 50, credit sales 60. So your total sales are 1,10,000. Why this is important? Because we should know what is the cost of sale. Cost of sale, because closing stock we should identify. How do we do this? You made, suppose if cost is 100, cash sale price is 120, because 20% on cost. You added 20 on cost. So suppose if cash sale is, cash cost is 100, cash sale price is 120. In that case, selling price is 50 by sale into 100 cost price equals to 50,000 by 120 into 100, 50,000 by 120 into 100. The cost price is 41,667. Assume 41,667 into 1.2 is 50,000. So this is the cost price of cash sales, right? And similarly, if cost 100, credit sale price is 125, because credit sales are 25% profit on cost. We have given selling price, right? So cost price here equals to sales 60,000 by selling price into cost price. 60,000 by 125 into 100. So your cost is 48,000. Check, 48,000 into 1.25 is 60,000. So now you know the cost price of the goods sold. What you can do here is total goods, a small correction needed here. I am changing the goods returned to 5,000 only. 5,000 only. Otherwise, there is a total mistake. Right. Now, total goods sold equals to 41,667 plus 48,000. 89,667. right? But actually you sold for 50,000 plus 60,000, 110. But the cost price is 89,667. Why it is important? That we should know here. I am preparing memorandum stock account. I received the goods, right? Say two goods received 1 lakh by goods sent back 5,000 by cash sales cost price 41,667 by credit sales cost price 48,000. So by stock balance 5333 is the balance of stock still with the branch, right? You have stock balance, debit and credit. Similarly, we also need to prepare an account for debtors. Debtors to sales, debtors to sales 60,000 by bad debts. How much is the bad debt? Internally 3,000 and discount 2,000. So coming here, bad debts 3,000 by discount. These are not accounts memorandum, working notes only. And by, you don't know what is the, you know what is the cash collected, right? Cash collected by customer is 50,000. They paid you 50,000 by cash. So by balance is 5,000. So the customer balance is 5,000. These two are very, very important to prepare. So you prepared memorandum stock, you prepared memorandum debtors to identify closing balance of stock and closing balance of debtors. Now you also need to know what is cash sent back. That is question mark. Now we'll see. Total cash collected. Number one, from cash sales 50,000, from credit customers. How much from credit customers? You collected 50. Cash customers also 50. Credit customers 60 sales, but collection is only 50. So total cash collected is 1 lakh and sent back. Nothing you left because no cash balance is given closing. So sent back to HO. Right. Because for expenses, HO paid you 30,000 and same expenses you incurred. HO given you 30,000 and you paid 30,000. So there is no extra cash you require. So with this information, what I should prepare is my branch account. Right? First, no opening balances. 2, goods sent to branch 1 lakh. Buy goods sent to branch returns 5,000. then to cash, received for rent and received for salaries, 10 and 20. You paid the expenses, irrelevant. You don't record in this. It is done. And then by cash, sent to HO. How much cash sent to HO? 1 lakh. Yes. And then by balance carried down, stock and debtors. We have the figures here. Debtors 5,000, stock 5,333. So if you see this, your credits, sir. So after posting all the debits and credits based on our memorandum of stock, memorandum of debtors and other calculations, we should see which side is more. Looking at credit, credit is 1,15,333, whereas debit is 1,30,000. So I took debit as my total 130 and 130, and by net loss to general P&L, which is 1,30,000 minus 115,333, 14,667 is my loss. Now, I want to cross check whether my loss is correct or not. For that, I should do a reconciliation. I am first computing my gross profit. Cash sales, I made it 50, but the cost is 41,667. So I'm taking it here. So the profit made is 8,333, and credit sales I sold at 60, but the cost is 48,000. The profit is 12,000. The total is 20,333 is the gross profit. Now expenditure, I spent salaries 20,000, rent 10,000, bad debts 3,000, discount 2,000. So my total expenditure is 35,000. This is total expenditure. So expenditure of 35,000 greater than gross profit of 20,333. So here my expenditure is 35 and my gross profit is 20,333. If I compute this difference, it is 14,667, which is my net loss. If you see here, my net loss is 14,667. This is the reconciliation to check whether my answer is correct or not. So what I actually did in the question, step wise, if you see, number one, I prepared my memorandum stock account. Why? To identify my closing balance. Number two, I prepared my memorandum debtors account to identify my closing balance. Then what I prepared is collection amount sent to HO, entire sale proceeds received. Entire sale proceeds received. Received were sent to HO, and then I prepared my branch account to identify profit or loss. Now one more account left is goods sent to branch account. Why this account? By branch I received 1 lakh, branch received. To branch sent you back 5,000. So net to net with branch is 95,000. From where I sent it? From my purchases account. So that HO should reduce it from its purchases, because if HO books the purchases, it will be double count. From purchases it's sent to branch, right? So HO should debit to either purchases account or trading account, so that this account shall be closed. Goods sent to branch account should be always closed by transferring the balance to purchases account or trading account of HO. Now, so the entry there is, when we learned all the entries, the last entry which we need to pass is here, goods sent to branch to purchases account or trading account. So this is the basic introduction of your dependent branch cost price method. This is a sum I've given with the data, and we did the solution here. We started with identifying what is the cost price of cash sale, cost price of credit sale, total cost price of goods sold. Then prepared memorandum stock, we identified closing balance. Then prepared memorandum debtors, we identified closing balance. Then we identified total cash collected and sent to HO. Once all the three were done, we prepared branch account, debited goods sent to branch, credited the returns, debited cash collected, credited cash received, posted the closing balances, identified the loss. To cross check the loss, what we did, what is the profit made on cash sale, what is the profit made on credit sale, total gross profit, and what are all the expenses, salary, rent, bad debts, discount, total expenses. The difference between total expenses and gross profit is the net loss transferred to HO P&L account. That's what your general P&L account, net loss. And ultimately we prepare the goods sent to branch account by branch to branch returns. I'll write here returns, and the balance transferred to debited to purchase or debited to goods and credited to purchase or trading account. Right? Why it is? Suppose say if this is the HO trading account, from its purchases, suppose HO purchased 2 lakh goods, it should deduct goods sent to branch 95,000. So HO's net purchases are 1,05,000 only, because 95 is with the branch. Or the HO, alternatively what HO can say, it can show purchases here 2 lakhs, but it can write by goods sent to branch 95,000. Whether you debit the purchase or whether you do it in the trading account, the answer will be the same. If you post on the trading account, this is HO trading account, either you reduce from purchases or you keep the purchase as it is and post on the credit side of the trading account goods sent to branch. The net impact is only 1,05,000 on HO's trading account, right? So the entry is either to purchase or to trading account. The impact is shown here. HO should not debit full. It should only take 1,05,000 as its own purchases because 95 already transferred to branch, right? So this is the solution, first method, which is branch debtors method or branch account method. We'll be doing sums from the textbook on the cost price method on branch account method, branch debtors method under dependent branches. Thank you. We'll meet in the next session.